Hey guys, welcome back to the channel. So today I have this new trading strategy which I'm going to backtest for you over 100 trades. I will tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. This strategy involves two trading indicators, the 50 and 200 simple moving averages. A simple moving average, also called an SMA, is an arithmetic moving average calculated by adding recent prices and then dividing that figure by the number of time periods in the calculation average. So for example, a 10 moving average would average out the closing prices for the first 10 days as the first data point. The next data point would drop the earliest price, add the price of day 11, and then take the average, and so on. Likewise, a 50-day moving average would accumulate enough data to average 50 consecutive days of data on a rolling basis. So this backtest is based with a 1-to-3 risk-reward ratio. So that means that every $1 that we risk, we aim to make $3. This strategy is offline, which means I will go back in time on the chart to test this strategy and see how it would have performed. Therefore, it doesn't take into account commissions or the spread. So here's the strategy. So we buy when the 5 SMA crosses the 15 SMA from below, and we sell when the 5 SMA crosses the 15 SMA from above. The second rule is that we place the stop loss at the price of the 5 SMA when we take that trade. We can have a maximum of 2 trades at all times, so it can either be a long or a short, and we move the stop loss to break even when the profit is equal to the maximum risk that we are risking per trade. The risk to reward ratio has to be 1-to-3. So let's get on the charts now so I can show you a few examples of the strategy, and then we will dive into the 100 trade backtest. So here you go guys, on the charts with the British pound against the Japanese yen on the 15-minute time frame. So we'll go ahead and add the 2 SMAs. So I've got them saved here. So the first one has a length of 5 bars. The method is indeed SMA. I will change the color just to make it a bit more obvious, and I will change the thickness. And the second SMA is 15. I will make it green. All right, so essentially zoom in. So we would take a long when the white line, so the shorter SMA, crosses above the green line, the longer SMA. So here you would take a long trade here. You would put the stop loss at the price of the 5 simple moving average, and you would aim for a 1-to-3 risk reward ratio. You would take a short right here after that green bar, and in the case of the 5 EMA being extremely close to the entry price, you can just simply put the stop loss at the recent swing. So essentially it would be here, this bar, and you would aim for 3 times the risk. Same here, we'll go along here. But in this case, the price pulled back too much, so it would have been a loss. So I'll show you a few examples and then we'll dive into the backtest. As you can see here, the white line crossed the green line from below, so we take a long. We put the stop loss at the last swing low simply because the white line is above the entry price. And we aim for a 1-to-3 risk reward ratio, so that's a win. Here it crosses again to the downside, very close, but that's a win. Then it crosses again to the upside, that's a loss. So is this. There's a pullback. So is this. So as you can see, when the market is flat, this strategy doesn't perform very well. However, in trending markets, it can yield very good results. So let's go ahead and do the backtest and see if this strategy is actually worth using. So there you are, the results of the backtest. So we were on the GBP JPY instrument. We were risking 5% per trade. So we had a maximum drawdown of 26% of the account. We were using a risk to reward ratio of 1 to 3, and we had 40 wins, 51 losses, and 10 break-even trades, with 5 wins in a row and 6 losses in a row. So that gives a win rate of 44% over 17 days. So the total profit was 537.7% of the account over 17 days. That's pretty insane. So I'm very surprised of the performance of this strategy. When I was looking for trade examples, I seemed to be struggling to find good trades. But over those 17 days, it's been very impressive. If you had started with $10,000, you would have ended up after 17 days with more than $53,000. So let me know what you guys think. If you can think of any way of improving this strategy over the long run, perhaps using a different time frame or a different risk to reward ratio, which may be able to improve the performance or reduce the drawdown. So let me know what you guys think, and I'll see you in the next video.